Well, one of the stocks on our radar is electronics Mart. The reason why we're speaking to the management, apart from getting their business outlook going forward, is also because on Friday, promoters Karan Bajaj and Pavan Kumar Bajaj sold about 8% stake in the company. Promoters who held about 73%, their stake comes down to about 65%. Premchand Devarakonda, who's the CFO of the company, joins in now. Thanks a lot, Mr. Devarakonda, for joining in. Obviously it's not your call to take, but if you could explain to us what the rationale for the promoters' stake sale was, and secondly, is there any more on the cards? Because, they've sold about 7.8% already.
Very good morning. And first of all, thank you very much for having me on your show. Before we get into the further discussion, I would like to update you on the background of our promoters. Our promoters started this business way back in 1980 from the scratch, and they reinvested whatever they earned from the business in the same business, and they grew the business over a period. And it is the time for them to unlock their capital and also secure their families. So that was the only intention they had for diluting their stake in the business. And also they don't have any plans to set up any parallel business. So the entire family is working on growing this business, and they don't have any other business also. That's the reason why I think it is, yeah.
What we want to understand is if they will sell more, because now what they've sold gives them about 690 crores. They still hold about 63% stake in the company. Will they continue to hold on to that, or could there be some more selling in the very near future?
It will not happen in the near future, as per my discussion with our promoters. And they are right now holding about 65% stake in the company, and that will be retained by them till our share price touches 1,000 rupees. That's all.
Sorry, you're saying?
You're saying promoters will be there till the share price touches 1,000 rupees. It's 41 right now.
And you. So let me combine.
So they won't sell till 1,000 rupees.
No, I'm just saying in jest. You said near term and 1,000 rupees. So 1,000 rupees in near term.
Yeah, if it goes to 1,000, we never know. Like if someone wants to pay, right? So we never know that. But I'm very jokes apart, and they're very clear that they want to hold the 65% for long term. That is for sure.
Okay, long term. And should we take that 1,000? Or you was just saying that in jest? So you're saying that for the long term?
I'm just, don't take it seriously, I'm just kidding.
Okay, got it.
Okay, so let's come down to the brass tacks with the business, sir. And business has looked quite okay. The revenue in the first quarter is up 17.3%. Your margins have been steady at around 7.8%. Let's track the longer term trajectory, same store sales growth. So in FY22, it was around 22%. It dipped to about 17% in FY23. FY24 was 8.4%. So give us two parameters. One, what is the revenue target for this year? And second, what is the same store sales growth that you'd like to maintain on a steady state basis?
See, we are targeting year-on-year 15% top line growth. That is 7%. And second thing, we would like to maintain the same store growth at above 8%. So it may go up to 10%. So it will be ranging between 8 and 10.
Okay, so same store sales growth between 8 to 10%, top line growth this year targeted at about 15%. Just break this down in terms of geographies as well, because while you're really dominant in South India, you've also been expanding into the NCR region, into the north. So what is the revenue mix right now, and how do you see it shape up as we go towards the end of the year?
See, currently we are getting 60% of revenue from Hyderabad, about another 8% has come from NCR, and the remaining from the Telangana, Andhra states.
Right.
So that mix, that proportion will be more or less same for the year. So that's what we are expecting.
All right. Mr. Devarakonda, I wanted your thoughts on 2 points in particular. One, NCR, while it is a small contributor to your revenue, the leverage out here available is a lot more, because NCR is still about 2.6% margins. The per store sales is a lot lower than what you do in South as well. South has 8.3% margins. So at what point does NCR scale to the same per store metrics as the South? That's point number one. And secondly, because a large part of your revenues are Andhra and Telangana, the recent political elections, etc., which is happening, the thrust on infra in Andhra and Telangana, could there be further than this 15% growth out there? So on both South and North, I wanted your thoughts.
See, North, we have a lot of scope. Currently, we are having less than 5% market share, not even 5%. It is further less. It is at around 1% market share in NCR. There we have huge potential to grow our business in the near future. And it takes at least as per my assessment, it will take another 2 years to reach the same levels of the South market. And South market will be growing because the economies of these states are improving year on year. So as a result, the market is also expanding. And we are also expanding our stores to the tier 2, tier 3 cities rampantly in South cluster. So as a result, there will be consistent, at least for the next 4-5 years, there will be consistent growth in the existing market, and there will be the growth will be much better in the North cluster.
Sir, just a word also on your product mix, because I think it's the larger appliances, high-ticket items, which fetch you better margin. But their contribution in your mix has been coming down. Mangalam tells us it's come down from 61% to about, I think, 42% in FY24. So what is the targeted mix that you want to have? And give us some sort of a trajectory on margins. I mean, full year blended EBITDA margins for this year. What is it that you're aiming at?
See, the product mix is not under our control because markets will drive that. So if the demand for mobiles go up, obviously their contribution will be more in our product mix. So, for example, in the last summer, there was huge demand for the cooling products. As a result, the proportion of the large appliances has gone up drastically compared to the earlier years. So that's why it is purely dependent on multiple things. But we are giving equal importance to all the product categories because each product category is headed by one business head. So their responsibility is to show an improvement year on year in their categories. So that is one part. And what is the second question you asked?
Margins.
The margins, sir. Full year margins, what are you targeting?
So in the first quarter, we had an EBITDA margin about around 7.8%. And by end of the year, it will be above 7%. So between 7 and 7.5%.
All right, we'll leave it there. Thank you very much for joining us. Good speaking with you. And thank you for being with us here.